I'm Megan Horniman, the Chief Investment Officer for Verdant's Capital Advisors. We're coming to you today to give you a review of our most recent report regarding the upcoming midterm elections. We know with about 85% of Americans thinking that the country is going in the wrong direction, that this upcoming midterm elections are going to be just about as important as a presidential election. Now, in this report, we're not going to focus on which combination of government will be better for the economy, especially an economy that's facing so many challenges and headwinds. Instead, we're going to focus on the key issues that are at the forefront of voters' minds. We're going to look at history and what does that tell us about not only presidential cycles, but also midterm elections. We realize there's a lot of topics at the forefront of voters' minds as they head to the polls next month. Inflation. This is a key issue for many American families. As you can see in this chart, inflation is running at levels we haven't seen in nearly 40 years. Food prices are up more than 10% over the past year. Energy costs are up more than 20%. The savings rate of households is down to a 14-year low. Just to pay for these everyday necessities, Americans are turning to credit card debt, which is growing at a double-digit pace. This is affecting consumer sentiment and is likely going to be a key topic as they head to the polls. As I mentioned, energy. Americans are forced now, if you go to the gas station, you're looking at gasoline prices that are well above the past decade average. As you can see in this chart, we've seen gasoline prices come down, but we're still sitting at levels well above the past 10-year average. And energy is a very partisan issue, how to solve this problem. So we do think this is going to be a key topic in voters' minds as they head to the polls. The U.S. economy has already entered that technical definition of a recession with 2 consecutive quarters of negative GDP. And we agree that the challenges are not behind us from an economic standpoint this year or even next year. But history does paint a little bit more of an optimistic picture when you look at how the economy fares throughout a presidential cycle. And if you look at this chart, year 3 and 4, which will be 2023 and 2024 for President Biden, you tend to see the best numbers from a GDP standpoint. In fact, it's actually rare that you see a recession in the 3rd year of a presidential term. So that would be next year for President Biden. It's only happened one time in history. This may be because of the fact that the president wants to get a lot of the bad news or a lot of their agenda items out of the way in the beginning of their term so that they can set up now for their own reelection as well as helping their party in the second half of their term. When it comes to the equity markets and how they react after midterm elections, past performance is not indicative of future results. This is a financial disclaimer that you have probably seen many times. This environment is highly complex to try and gauge if the midterm elections will have an impact on the equity markets. We think it's one factor that we can consider. We have to look at the earnings environment, the interest rate environment, the economic environment. All of these fundamentals tie into our outlook for the equities over the next year. But history can tell us a few things about the midterm elections. And in this chart, you can see that in all of the midterm election years, going from the midterm election date to 1 year later, there's only been one instance where the S&P 500 has been negative, and that was in 1938. If you look at this chart again, the comparison that many are drawing between the current environment and the 1970s and 1980s, even those midterm elections saw positive performance in the 1 year after the midterm election. The average in all of history has been about 15%. And if you look a little bit further and you look at how the S&P 500 was faring in the year leading up to the midterm election, if it was negative like we are right now, the performance of the S&P 500 1 year after that midterm election was positive 100% of the time, and it was on average 19%. In this video, we used history to draw comparisons on how the economy and the equity market have performed surrounding not only midterm elections, but also presidential cycles. Now, history and politics are just a couple of the factors that we look at when we consider asset allocation. In this challenging economic climate, there's so many other underlying fundamentals that we're taking into consideration when we look at portfolios. There's a couple things that we do know. Equities like gridlock. The chances of any major tax legislation getting done become thin when you have gridlock. Active management is crucial in not only this political climate, but this economic climate. And lastly, we know that the day after the midterm elections, that race for the 2024 presidential election has begun. Expect volatility to continue. If you have any questions or concerns, please, we are here. Feel free to reach out to your financial advisor.